Hello, everyone. Welcome back to the RationalInvestor.com Broiler Chicken Show. Trade your trading plans. Don't take too much risk on any one trade, and just let yourself get rich. Hello, everybody. Welcome back to the Rational Investors. What is this? This is our Broiler Chicken Show. Back. Actually, I was spitting out chocolate eggs this morning. Happy Easter. Interestingly enough, though, that this should be actually a somber holiday, I think. I don't think this is a happy-go-lucky holiday. But for the kids, I can understand the idea of Easter bunnies and all that kind of fun stuff. And I think to a certain degree, this is actually supposed to be the celebration of us transitioning from yucky winter weather in the Northern Hemisphere back into happy weather again. April showers bring May flowers and all that, eh? I think this is a bit of a screwy year, though. I mean, everybody, I'm sure, fully can appreciate how effed up the world stage is, and of course, pandemics and all that kind of stuff. 6 different celestial events, all happening in this 2020s window. This hasn't happened in over 1 million years, and us as a human species, we haven't actually, as I guess an advanced species, although I find that highly questionable. I heard, what the Russians are doing these days? They are tying protesters who don't want to go and fight on the front lines, or Russian soldiers who get like pissed drunk and they just give up. They're like, fuck it, might as well just be drunk and die drunk. At least I'll be happy. They are tying them to trees and like literally leaving them for days. And of course, just before they leave, they give them a couple punches to the head to remind them about what assholes the Russian people are, I guess. I mean, just disgusting, the stories of stupid human species. I sure hope to God. I mean, if Joanne really did visit me in the afterlife, that means there is an afterlife, and I fully believe that with my entire heart and soul. And I hope to God, assholes like Putin get fucking held to their feet over the fire in the afterlife. This stupid species just disgusts me sometimes. So anyway, it'd be interesting to see how the Beamish finishes his life. Actually, I'm coming up on the big 5-5 over the hill +5. So I think I've outlived the average duration of a human life here on this silly planet. So, and I think I've spent the time since JoJo's passed productively. I do believe I've helped a bunch of people. And what I really hope, fingers crossed, is, some of these videos stick around. Hopefully people save them and stuff like that. And, 100, 200, 300, 500 years from now, people are talking about the Beamish and some of his funny, crazy ideas about trying to set yourself up for success speculating in this world. Versus the stupidity that seems to just permeate our species when it comes to investing. So that's my big hope. And I think that's actually where JoJo was like, you could make a positive difference in this world. Just got to kind of try, be consistent. I mean, the good part about what I do with all of you is I show up week in, week out, month in, month out, year in, year out. I've been doing this consistently now for at least a decade. And those people that apply themselves and take notes. In fact, actually, I even saw somebody who like 5-6 years ago said he was diligently taking notes and learning tons about how to trade and how to set himself up for success. I was surprised even a week or two ago, I saw a comment from him saying, you're still a mentor of mine, Brian. So I thought that was positive. And I do one thing I really do like is I get messages sort of out of the blue from people I've worked with over the past decade or two, just sort of saying, hey, Brian, I'm still trying. I'm a human. I keep making mistakes. And, that's just the way it goes. But I'm still trying, and I still listen to you and try and follow you as a demonstrator of best practices. But I'll tell you, it ain't easy. I even saw. Hey, there you go. Hey, that's a great Del Moody guy. Yeah, wow, what a fascinating person you are, sir. I don't know how communities are going over there around the world. I know one of the people that I used to work with. He started up his own trading community. It'd be interesting to see how those kind of trading communities are going through this pretty tough time in crypto. And the irony of it all is that this is the way markets work, right? At the very top of the market, guarantee you, this place will be flooded with people. Hundreds of people in this silly education program where you're like, this is ridiculous. And then at the very bottom of the market, nobody, total crickets. And actually, in the newsletter, I even included a chart, which to me looks like an absolute no brainer. There is some serious money to be made on this, Mina. And actually, one of the ladies on the site was actually pitching me the idea. And I was like, well, I already bought in the reload zone. I might buy some more if this thing W's out. But just such a perfect anecdote of capitalism. And if you don't know this, for God's sakes, write it down. You should all have your journals out because I just keep dropping value bombs totally randomly. And these videos are about, an hour, 2 hours long. So you never know when the hell a value bomb will be dropped. So you got to pay attention the whole damn time. One thing I will say is I'm one of these types of guys that you can actually put the video on like 1.5 speed and you can still pretty much understand what I'm saying. And so what I would suggest you do if you're relatively new to the channel is watch the entire show. On top of funny, controversial things I'll drop every once in a while, I do actually provide some value every once in a while. And then you'd be like, whoa, I never heard that before. So put it on like 1.25 speed, 1.5 speed, whatever. And as soon as you hear something like, hey, this is the market I'm interested in, then slow it down to normal speed and listen to me blab away. So I am now officially relocated outside of the city of Vancouver, which I suppose is a nice treat. Living in White Rock, BC now, pretty close to the US border, actually. In fact, I can even see the United States outside my window. Pretty nice ocean view, so very relaxing. We had one of our older site members pop by my place the other day. He's like, "Yeah, this is very calming. This is actually very healthy for you just to sit and watch the ocean." The only problem is like literally the past couple of days, I park myself on my couch and I just sit and look at the ocean, and man, you can let hours just drift by. It's mesmerizing. So anyway, nice treat, nice change. Actually, thinking about in earnest now, seriously, and actually, I think that this is serendipitous. I think, if anything, thank you, Orange Toupees. I appreciate it. He is injecting enough economic uncertainty and a fear of God into the public. And of course, the public always does the wrong thing at the wrong time. And so the public actually is getting quite active at cutting prices of real estate down in the States. And I think this is opening up a really interesting buying window, not only for assets like big chunky assets like real estate, but I'd actually argue a lot of assets in the stock market, a lot of assets in crypto, like our minute chart here. This is the only business when stuff goes on sale, nobody wants to buy, right? And you could argue same thing in real estate. If you are buying real estate for speculative purposes, it's just the funny way this human psychology works. There's one place in particular I was looking at where right into that stupid peak of the sickness and the way the idiot public was acting, these people wanted like 350,000 for this particular place. And I'm thinking about like literally throwing in a low ball bid. Place is still for sale, no takers. And I'm literally thinking about like putting in a bid for like half that price. So, ironically enough, when the public is most pessimistic, that's when Brian is actually most optimistic. And then conversely, when the public is acting stupid, that's when I'm like, oh boy. You want to see the definition of stupidity? Hey, here's my face. No, the definition is stupidity. And actually, when somebody posted this in the lounge, I even turned around and said, "Oh yeah, oh my goodness," and I even had to tweet it out because it was just so perfect. What is the definition of stupidity? I will show you. I mean, this is just, it's so typical of the public. And if anything, in this sort of psych ops world, is that the term that they use? I don't know if that's the correct term. Psych ops or P psychology ops or whatever. You actually have to ask yourself whether this has been done on purpose. So I see this is the gold price. And I even have a better chart of the gold price. There, look at that chart. Holy crap. So this is going all the way back to the 1970s. And if you just simply drew a trend channel off of this low, and hell, I even remember when that happened. This pop right here was in August of, I think it was 99, if I'm not mistaken. And I remember a house came out, the gold price was like about $200, $225, $250. And House came out and said, we think gold's actually kind of cheap right here. And gold just jumped up. Then it slowly worked its way back into the lows. This is all around, manufactured wars in the Middle East and sons of CIA founders and all that kind of talk. I mean, disgusting, the corruption. And actually, I think that this was sort of kicking off the corruption of our modern day society, especially right here. I think this was actually the beginning of the unraveling of our modern day society, right about there. If you understand what happened there, then you'll understand what I'm talking about. I won't go into that today. But anyway, so if you just draw a really simple trend channel off of that pivot low, and then that pivot low, that pivot low, that pivot low, that pivot low, it's kind of, and then just drag that channel back to the old 1979-80 peak. Oh, hello. What an interesting coincidence. And then also, if you ever traded with me, you know that I love the bot. So you can see how the bot's basically A, B, C, D, and it breaks it into quarters. So that's clearly a trade level. Boom, 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 profit targets hit. And then, of course, in our education program, we teach you about Fibonacci extension levels and the concept of the parking garage. AB equals CDs. This is an alt ABCD level. It's actually a valid trade location level, 1.618. And I often call this like the no-brainer trade location level. I mean, like literally the market, it can't get really much more than this. This is the definition of exhausted. You ever see these 1.618 alt ABCD levels? I mean, they're just absolutely sick. So, parking garage, top of like, this is like a 40-year trend channel. You don't think the market's going to respect a 40-year trend channel? Come on. And the interesting thing is you can see how the midpoint of the channel was respected through here. Obviously, it was clearly respected here. You think the odds are maybe we come back down to that midpoint of the channel? Seems logical to me. Anyway, lots and lots of confluence of levels up here. Just absolutely insane. And the irony of all of this stupid game is it goes trade location, indicator confirmation, price structure, go. Licks, right? Remember to lick my balls. What? No, that's not what I'm supposed to say. No, licks, location, indicator confirmation, structure, go. Licks, go. Let's go. Interesting combination. Anyway, Brian being stupid. So you've got trade location here. I suppose the question is, if we drill down to a lower time frame, do we start getting divergences? Do we start getting M's in price? And then, of course, once you see that happen, you can see how long this M took to develop. And then, boom, we spend like literally 10 years in the shitter. 10 years here, folks. So, I mean, look at this M. And then what's that? This is like, that's like 20 years in the shitter. So, the coup de grace of all of this was somebody, and actually, I think this gentleman's fairly intelligent. Somebody came in and posted in the lounge, and of course, on these tweets, right? Fog and bombs, alt ABCDs, channel tops, parking garages, blah 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 blah. I mean, that's a hell of a lot of reasons just for trade location unto itself. And then somebody posted in the lounge this morning, which makes absolute perfect sense. This. And, there's a great Del Moody said, Psy Ops. Is that what it's called? Is this person really this stupid? This is about the dumbest thing you could possibly do. This is basically gambling. If you want to go to Vegas and throw all your money on black, right, on the roulette table, great, you can do that. This is so irresponsible. It's that YOLO kind of thinking. It's like when, Bitcoin, what was that stupid idiot from fucking Middle East selling courses on how to buy Bitcoin? I don't even know what the guy's name is. But what did we affectionately call him? Gucci sweater wearer, that guy, all that kind of talk. Just absolute stupidity and irresponsible. Like just downright irresponsible. So anyway, the point of the matter is, when this person posted this on the chart on the site, I was like, that's the icing on the cake. I mean, just from a really simple trade perspective, A, B, C, D, 1.618 parking garage share. I mean, you'd be an idiot to come in here and load up on the long side here. This is just stupidity. And the worst part about all of this, it's just like Bitcoin with that damn Gucci sweater wearer shit. Or Da Vinci coming in and saying, well, don't respect indicators. Yeah, they're in divergence. Yeah, RSI is actually incredibly accurate. And if it does go into divergence, you're about to get your head into it. Disregard the indicators. Just buy and you'll get rich. Oh, fuck me. I mean, just what's the point in all of this? Why do these people do this stuff? So... And the worst part about it is when this does correct, nobody is going to say anything. Nobody's going to say anything at all. It's just so irresponsible. And of course, what do you think the odds are? Somebody's going to see this and go, oh, yeah, man, I got to get in there. Oh, I got to buy. Oh, yeah, no, these guys are buying. Oh, and it's just utter and complete irresponsible. If a broker said this, they could very easily be sued by their customers, and the judge would literally say, give them all their money back, and here's $100,000 fine, and you are banned from the industry for the next 10 years. And if you don't like it, suck my gavel. I don't know. It's, if anything, the sad part about it is there's communist puppets, I guess, for lack of a better word, this idiot. And like tweets that I put out. I mean, this guy is such a fucking puppet of these people. It's ridiculous. But this guy actually wants to come in and basically censor social media. And there have been steps in my country to basically kill free speech. It's terrible. But at the same time, too, I bet you there are a lot of Winnie the Pooh lovers and Vladdy lovers, although I don't know how the fuck you love that guy. But even what I'm just telling you here right now, I mean, I hate to say it, but this kind of stuff, these people should be held to account for posting stuff like this. This is downright irresponsible. And what's even worse is the guy who bought this platform, he is jacking this. He loves this kind of talk. Why? Because it fires engagement, right? the fact that somebody's going to go and pile all their net worth or maybe even borrow money to go and buy gold here because of this kind of tweet, and then they might actually, or post or whatever the fuck you want to call it, and then they might actually go and commit suicide because the whole damn thing blows up in their faces. Well, that won't be remembered. All that'll be remembered is how this guy told you on April 20th to go out and just load up on gold, right? And drive my subscriptions. I'm surprised he doesn't have on here somewhere. Oh, sign up for our site and join the raffle for a Rolex watch. That's another thing that pisses me off about these social media people is, it's really just a big fucking con job, Barnum and Bailey kind of stuff. And if anything, the guy who bought this, you know who I'm talking about. He has been called Mr. Barnum and Bailey. So if anything, it makes perfect sense that he's kind of distorted this into some big sort of circle jerk event kind of thing. Anyway, blah, blah, blah. That's the part where you zip through at 1.5 speed because Brian's just wasting all your time. But I did notice that gold chart, and if anything, the irony of it all is looking back at our newsletter, if I actually want to invest in something that I think you could actually make a lot of money in, you really should be looking at these damn cryptocurrencies. Now, I don't know the fundamental story that well. I had one lady, of course, on the site I told you earlier who suggested this isn't a bad project to be looking at. All I really care is what's a 50% rule, right? And here we are at 21 cents and the old high was $1.05. If you want a really easy way to figure out where this thing naturally probably wants to go, it's called the 50% rule. Sort of the bread and butter of a gentleman by the name of W.D. Gann, lived 100, 150 years ago. 1 unit of price versus 1 unit of time. And if you see prices of assets start to move up like this, where they're obviously moving up huge chunks of price in very short periods of time, then it probably means that this is way too far, way too fast. And sure enough, back down we go. Well, I think you could make the argument now the exact opposite side, right? And a natural healthy trend is just a 50% of these ranges. So as I said there before, we'll just even use this number. And this is really easy. I learned this a million years ago from a commodities trader who they didn't have big fancy computers. Hell, they didn't even have cell phones back then, let alone cell phones that were also fancy computers. So what's a pit trader supposed to do while you're sitting in the pit trying to figure out what the hell a 50% rule is? All you got to do is just take that low, add it to that high, and divide by 2. So, I don't know what the exact number is, but let's use this 21, keep it simple. This high here is $1.04, $1.05. Maybe for round number purposes, we'll use $1.05. Again, don't overthink this stuff. It's really simple. So we're talking $1.25 roughly. Keep it simple. Divided by 2, that sounds like about 60 cents. And what a surprise, you can see where actually most of the people, if all we do is we just look at where everybody in the marketplace placed their bets over the past year, right? And this is a little less than a year, right? 1 year would have been out to here, maybe a little bit more down here, who knows? But even if we just go back to last summer, right? What is the average price of this entire range? And it turns out that that's almost triple what the current price of this asset is. Triple, not double, triple. Right? And, this is nothing more than a visualization of where all the volume over this period of time traded. And what a surprise, the sort of average price, or not average is not the right word. The place where most business was done, where most people in the market actually are long or short, is right at this 55 to 60 cent area. Maybe you go 50 to 60, whatever. So what's the odds of you actually investing in something like this down here at 20 cents? And really, I don't even care if it's down here at 30 cents, anywhere in this area. And you just seeing the market just return back to where everybody is long or short, right? The mean, return to the mean. And remember our 50% rule. You could have used the exact same logic on this run up. What's the 50% rule, right? That low there is 31. The high there is, as we said, $1.05. So that's $1.35 divided by 2 is what? 65 cents, something around that neighborhood. And of course, there is 65, baboosh, right into here. So are you telling me that will not happen again to the other side? This is like commodities trading 101. And if anything, that is what this study is. Because keep in mind, I used to be a retail commodities broker. So on a weekly basis, I would peruse the entire commodities market, just simply looking for assets that are trading at 5 to 10-year lows. That's the number one thing you want to do. If you're thinking about buying, you want to buy low. Isn't that how it works? Not buy high. You want to buy low and then sell high. That's how you make money at this stupid game. I used to work with this one guy who used to always say, oh, yes, but you could buy high and sell higher. Well, you could, but that's assuming that the trend always continues. And, they always say, oh, the trend is your friend until it isn't. So, like using his logic, right? You'd actually want to be coming in and like selling low down here to buy back lower. I don't think that's a good idea at all. I think that's actually asking for trouble. Also, too, this is a basic principle of our level 2 program, the concept of value. I mean, ideally, what we want to do, and this is good old Johnny Hoagland, one of my favorite, I would say one of my favoriteest commodity traders I've ever met in my life. He's such a sweetheart. And actually, I even saw recently, there's this thing going around about making action figures of people. I don't know whether I deserve an action figure, but it was kind of funny. Somebody put this together. But Johnny Hoagland, I would definitely buy a Johnny Hoagland action figure. There's good old Hoag. Doesn't quite look like him, but it's close. Anyway, the point being that Mr. Hoagland would want us to come in at the bottom end of the range below value. So, Mr. Smarty Pants commodity trader runs a very successful prop firm, a very good coach, very good person all around. This has got him written all over it. But again, this is the principle that you want to force yourself to come in and buy at the bottom ends of ranges. But you tell me, how many people in the public are talking about getting all excited about this? No, what the public is talking about, stupid public. And let's just do a quiz. 31 people in here. Does the public generally make money when it comes to investing? Oh, look at that. There's people waiting to get in. Oh, fudge. Yeah, Chris had to take off. He's a bit exhausted. Sorry, Mr. Insights, Miss Insights, whoever you are. I didn't see you sitting over there. My apologies. So while I let you in, let's see if anybody answered the question. Does the public yeah, I don't necessarily agree with that either, Ella Vorn. I think that's you're playing into the fear. No worries was on YouTube as well. All right, cool. Mr. and Miss Insights. And really the question ultimately here is, and actually, you know what? This is a good quiz question for 35 of you. And now we got a couple people, but I know you guys on the call here on the lounge, you know the answer to this. So what is our number one job? What is our number one job as a trader? Let's see if any of you can even answer this. Yeah, the public's idiots, and they always lose money at this game. Chack Pack. Remember that Chack Pack guy? Made a whole fucking shitload of money because he fell ass backwards into the Facebook story. And then what did those idiots do? They all fucking loaded up to the tits in China right into the cycle peak, and they all got destroyed. Now, mysteriously, Chack Pack is like, he's like decades younger than him, younger than me. And yet you look at him and he's fucking going gray. Why? Because he's probably losing money hand over fist. And he can't sleep at night because he's got probably 50 people that want to sue him into the ground. Stupid. Just, I mean, there's a reason why I have such a beautiful coif. No, I don't. I'm balding. You know what the hell? I'm in my 50s. I suppose that's supposed to happen. But relatively little gray. And every time I go to my hairdresser to get a haircut, and I'm really overdue for one, she's always like, "Man, I can't believe you have no gray. What's up with you?" And it's because exactly what you guys are answering here. And if you don't know the answer to this, for God's sakes, write this down. That's the whole point of being here. Exactly, Great Del Moody. Your number one job is you are a risk manager. That is your number one job, is to make damn sure that you can come back and play the game again tomorrow. That is your number one job. And I can tell you unequivocally, without a shadow of a doubt, that if you start acting like going and throwing 100% of your net worth into ideas like buying gold here, you are not acting with responsibility with regard to what your number one job is as a trader. You can call it a trader, investor, call it whatever the hell you want. Point of the matter here is this is what the public does, and this is exactly wrong. Wrong, wrong, wrong. You are not thinking about what your number one job is here as a trader. And then if we go back to our Mina story here, and I mean, I don't know whether I'm preaching to the choir. I know some of you have been watching this for a very long time, and you should probably be able to answer this fairly easily. But you know, if we were gonna like grade this trade here, and if the W comes in, I can absolutely guarantee you I'm going to go buy some more. I already bought some down against these lows. You know, Brian reload zones. You know how the story goes. And if anything, this is a perfect analogy of why you don't want to shoot your wad all in one trade. Nanny nibbles, you know, give yourself the opportunity that if it does happen to work its way lower, you can always pick up a little bit more. So what I've said in this tweet is just basically, if W's come in, I'm adding to my bags, right? Pretty straightforward, pretty simple. I'm not even quite sure how I can articulate this question, but at 20 some odd cents, what do you think the statistical odds are that we see that 50% bounce? I'd say they're pretty good. And more importantly, from 20 cents, I can actually realistically realize a doubling of my capital. That's the key to this. Realistically doubling my capital. I would say, especially if W's come in, odds are probably a good 60, 70%. That's not bad. Now, let's flip that question around. Where the hell the damn image is? I guess I don't have it on the screen here. I thought I did. What are the statistical odds? And I don't even really know the fundamental story. Lucy could probably fill us in, especially with the fact that we tagged 1.618, no brainer, alt ABCD short trade location. What is the statistical odds that gold price, if I go and buy gold at $3,363, what is the statistical odds that this goes up to what, $6,700 an ounce? I certainly don't think it's 60, 70%. Gold needs to go higher before I go all in. I don't know about that. Have any of you, this might be an interesting quiz question of you. Do any of you follow my parking garage concept? You know, and if you took the level 1 course with me, I ram this down your throat. What did Bitcoin do when it hit its recent parking garage level? Can you appreciate that parking garages are pretty damn hard levels to punch through? This is the Bitcoin tweet for this particular newsletter week. And Gucci sweater wearers coming in. Actually, Gucci sweater wearers came in here and they had to die 1,000 deaths through that. But lo and behold, there's the parking garage. Maybe we can show you this in. There's the newsletter. Where is? That's stocks. Here's crypto. Hey, crypto. There, and there's another one. Parking garage. Oof. Into the parking garage and rejected. Push. I mean, this is what I teach you people. This is the concept of fib extensions. That's total. Where's our Bitcoin one? Bitcoin. There it is. This is, I mean, it's absolutely beautiful. 1.618 to 200%. Parking garage, push into the parking garage, rejected. So are you trying to tell me that, oh, maybe you can help me finish this sentence. How does this go? This time it's something. I can never remember how the hell that line goes, though. This time it's, no, can't remember how that line goes. Kind of can't remember how it goes. This time it's something. I don't know. Here's the gold chart. Gold chart. Let's go a weekly chart. There you go. Oh, look at that. There's another confluence of levels. It turns out this is an 877 off of this level. Oh, this is getting ridiculous how many damn levels there are here. Hey, there you go, Laura. Help me out here. Yeah, it's not, folks. It's the same. I mean, you got to look at this chart and go, you want me to buy here? What are you, crazy? I don't understand these humans, and obviously nobody listens to all of my, what do we got? 45 people watching this video. Steve Jobs. Is Steve Jobs still alive? I can't remember if Steve. I thought he died. Didn't he die of cancer or something? I wish silver would do what gold is doing. The irony of silver, though, is that it actually is, it's not even in a bull market, which is hilarious. It could, but I don't know. The circle jerking that I'm hearing around the metals markets, this is getting a little ridiculous. But I think silver is actually still in a trading range. So there's the ABCD on silver, and you can see, yeah, silver. We just got up to mountain man level there, and you can see how it was rejected. And also, too, I don't know whether you're familiar with silver, but silver is a very, very manipulated market. When I was a commodities broker, we used to joke about the mafia and the way that they used to manipulate silver prices. But anyway, so ironically enough, I actually don't think that silver is actually in a bull market. I think it's in a trading range. And we're just now working our way up into shorting trade locations. Isn't that hilarious? What do you guys say? Anyway, I can get wrapped up in the chat and I won't stay focused. I'm not even quite sure why I started the conversation off today with this whole gold market, but I will say, I might argue, from an investor perspective, you have to buy when others are selling and sell when others are buying. I think the public is quite enamored with the gold market. Ironically enough, the silver market, it's sort of, it is what it is. Gold market moving up, but the problem is are you really going to step in and buy right in the face of a basically a parabolic move? I don't think that's a good idea. I will say that I have been bullish of gold and bullish of the metals. So it's not like I'm short heading into this event. It just feels as though we've gone a little too far too fast here. And seeing these kind of comments like we saw there on social media from those Reddit people and Wall Street bets and stuff. I mean, maybe there's going to be some sort of insane blow off top here, but this is asking for trouble. And from a risk taker's perspective, I mean, you can see where bot levels are here. I would have preferred for you to say, well, Brian, I got a nice little trading range breakout here. Maybe I'm going to try and sneak my way in off of the bot, but even if you just started to nibble away and pick up stuff in here, I could live with that. That's okay. But up here, but are you crazy? So, and then conversely, it's a exact opposite conversation. Things like these cryptocurrencies. Actually, that's stocks. Where is our cryptocurrencies? I actually think that they're starting to get, and this has been the message I've been barking at you guys for a while. Is if I like to look at the market from, I'm going to buy low and I'm going to sell high. So if we come down like on the weekly commodity trend survey, this is nothing more than just what's the price over the past 52-week range. And are we below the 50% level or are we above the 50% level? And this just simply gives you a gauge as to whether something is relatively attractive, just based purely on where it's traded over its past 52 weeks. Ideally, we want to buy low, sell high. Most times, with regard to this particular study, 90% of the time, you're going to get in this particular case, the US dollar index 27.45 and the 50% level is 28.99. So what are we talking there? We're talking about $1.50 or so difference, which on a 27.45 asset is like 5% difference. That's not really enough to get really excited about. That if anything, if it's within 5% of its mean, it's sort of like, it's gyrating. Yeah, I mean, I'm not going to argue with this. Lower highs and lower lows defines a bear. And you can see how momentum is clearly pointing down. So there is no buy signal here yet. But at the same time, too, do you think it's a good idea to go in and short that there? I don't know. That's a bit tough. I might actually argue if we look at something like, actually, I think we can do it. No, those are my futures. I have too many screens, as always. I've got one future setup, one stock setup, and one crypto setup. It's always just bouncing between whichever one I'm talking to you guys about. Over here, this is the stock market chart where we have that gold chart. All right. If I look at the US dollar, and I always like to have it as sort of foremost on my screen. And I look at that daily chart. This is kind of like, are you throwing the baby out with the bathwater selling here? I mean, you can clearly see where the M's are. And ironically enough, if you actually do fog and bombs off of them, oh, what a big surprise. We just banged into a midpoint fog and bomb. I might actually make the argument. Actually, no. Yeah, that's off of this huge M here. I wouldn't be surprised if US dollar index has to come down into these levels. So don't be shocked. 99 down to 96. I actually like a push down into here, and maybe that's where your gold pops up to like 4 or 5 grand or something. And I actually think, believe it or not, I actually think this is based on these celestial events. Neptune went into Aries, and interesting enough, this is the dreamers and all that kind of talk. So if anything, I do like the idea that they're knocking the hegemony down through this window. And then when Saturn goes into Aries, I think actually this is when sort of calmer heads prevail. And, the damage that Mr. Trump's trying to do with all this tariff talk, I think that'll be yesterday's story. And that's the end of the move, not the beginning of the move. And I also might argue too, if we looked at a higher time frame perspective, this is a reload long zone right there, 61.8 to 78.6. So if we're thinking about buying this asset, ironically enough, it's never really come down into the buying window. There is that 4669 that I told you about just a few minutes ago. And you notice that that comes right into the midpoint of that reload zone. Think of this as like a tennis racket. This is what I teach in the school program, or a baseball bat, same sort of idea. So tennis racket, there's the head of the racket, right? And then of course here is the grip down in here. You can see what a wonderful artist I am. There's your handle, right? Maybe we'll put like a little support right in there, right? And then of course this is the actual face of the racket that you want to hit the ball with. Don't want to hit the ball with the with this part of the racket. Anyway, you get the idea. And right in here, right in this little part of the tennis racket, they call this the sweet spot. So ironically enough, with regard to the midpoint of this range, I think you could call that the sweet spot of the reload zone. Same concept. And that, ironically enough, is right on that 4669 level. And in a weird sort of way, I actually like, of course, I don't think we're going back to these days, right? I think a lot of people in the world would like us to go back to these days, but that's long gone. Those days are over. But what I would like to see here, believe it or not, is I would love to see, boom, boom. We can go here. Interesting enough. Look how close to 61.8 that is. 78.6. Ooh, I wonder if anybody knows what I'm thinking in my head here. And then we go down to 78.6 right there. Who can think about what I'm thinking? What is that pattern? I would have thought this would actually have been a little bit higher, to be honest with you. But that might work. That's actually a little bit low. We would have liked to have seen this up at 78.6 there. So maybe it's not quite. But there to there to there to there to there, if we actually get a pivot right there, interesting enough, right on this long-term support line here, the original head and shoulders breakout level. What pattern is that? Fascinating. So kind of hard to see here with all these squiggly lines. But that would be, and actually it should be a little, well, yeah, I guess that is 78.6 there. That looks a little bit cockeyed though, doesn't it? Anyway, that would be a Gartley pattern. So keep our eyes peeled for that. I don't know whether I've drawn this correctly or not. So if it's 50%, then it would be a bat, which would take us down to 88.6. But something along these lines, I actually like as a major long-term cycle pivot. Maybe we have a big puke out here, and of course the gold goes straight up, then comes straight down. I don't think that that's what happens. Maybe this happens like over the fall. I could very easily see a backing up, maybe against this trend line, and then a final dump into that level, something along those lines. But that's kind of what I'm thinking here with the US dollar. If you were US dollar bearish, okay, I mean, I can live with that. But shorting here, what are you, crazy? So, I could definitely understand if somebody had come to me and said, I think I want to short US dollars up at Mountain Man levels, trade location. In fact, I suppose if you're a fan of that ICT guy, up into this, what does he like to call this? Like a fair value gap or something like that. I like this area as a traffic area, so not really a big surprise. A big old top came in up there. I can understand that. That's not shocking, but coming in and selling here, what are you, crazy? So anyway, that's my take on the US dollar and the gold market and all that. if you're coming in like somebody publicly coming in saying, I am selling all my US dollars and getting into the euro or the Chinese dollar for that matter. Here, I think you're asking for trouble. There's Mountain Man. There's probably one of the best futures traders I ever worked with. And we don't have it anymore. They took away the damn symbol. It's so stupid. So anyway, I have to do this and then I have to turn it around. There we go. Mountain Man level. Not a big surprise. We've tagged that. And actually now we're having a little bit of a fight. If you were interested in buying US dollars, what I would just simply say is we want to go now. We're entering trade location, which is interesting. And now we want to see signs of indicator confirmation. Give me big fat divergences. And then we want to see price W's. Look how long this M took to develop. This might take 6-8 months to play out here, looking for a bottom. And of course, that feeds right into all these people all absolutely insanely bullish about gold. They'll all buy, they'll all get loaded up, and then this stupid thing will bottom and it'll start taking off and they'll all be trapped up top. Mark my words. All right, there's somebody, a bad harmonic or a Gartley, it's something like that. You can sort of feel it coming, But the point I would just make, and this is the point of this conversation, is don't go in and sell an asset all the way down here. You missed the opportunity. It was on this M up here, but here, what are you, crazy? So anyway, and then the exact opposite conversation with regard to the gold. Actually, this is an interesting conversation, speaking to the level oneers, about just purely what is the message of the market right now. So if we use the gold and silver, and remember we said the silver's not really moving up. So the question here is, why is the silver not moving up? What is silver actually looked at in the marketplace? Do you go and buy silver because you think the end of the world is coming and you want to load up on precious metals that act as currency hedges? You don't buy silver for that. If anything, they used to call silver the poor man's gold. Silver is actually used in quite a few industrial applications. And also, too, I did find it interesting. They even included things like silver in clothing because it turns out silver has odor absorbent qualities that make workout clothes weaved with silver that much more agreeable to the senses, we'll say. You understand where I'm going with all that. So, one of these silver bull markets, they were touting Lululemon as a proxy for playing the silver market because they were weaving silver into their female workout clothes because, of course, the females do not want to smell odorous as they are working out. So, years gone by when the Hunt brothers tried to corner the silver market back in the late 70s, early 80s, one company came along and absolutely destroyed them. And they never expected it. And of course, what's fascinating is people don't really ever talk about this. But as an old commodities broker, this was the line that I used to be told all the time through the whole thing and through all the commodities brokers. What was the reason that silver actually stopped its rally back in the 1970s and 80s, the early 1980s? And almost everybody that I talk to never gets this right. Never, never, never. So what was it that actually brought this silver bull market to a grinding halt up here? Anyway, my take and my message to people is a company called Eastman Kodak was in the photography business, which is fascinating because now photography doesn't use silver. But for like 100 years prior to this event, silver was the main component of the photographic industry. And Eastman Kodak used to literally have like warehouses filled with physical silver, and it was for nothing more than just the processing of photographs. And the Hunt brothers came along and said, "We want to corner the silver market. We think prices are going to the moon." And Eastman Kodak came out and said, "You want silver? All right, we'll give you all the silver you want." And that was the end of the bull market. What's fascinating, though, is nobody ever remembers that story. Everybody remembers things like, well, it was the Fed that came along and destroyed them. I would say the Fed is nothing more than a bureaucratic body. Ironically enough, the Fed, keep in mind, they get their marching orders from the Rothschilds. But they move very, very slowly. I don't think that they single-handedly. If anything, it took the appointment of Paul Volcker and the U.S. government itself to say, officially, we want a war on inflation to bring inflation to an end. And then that's what gave the Fed permission to crank interest rates to the moon. And that was almost after the fact. But anyway, that's here nor there. Point of the matter here is, I mean, maybe gold does something like this. I doubt it. And I don't think you make investment decisions based on this kind of probability, because the actual probability of the market going parabolic is relatively low, in my opinion. But here is actually a really good example where, in the gold space, what I'd be looking for, as soon as we start painting things like M's, look out. Oh boy, all hell's going to break loose. No M's yet, but nonetheless. So, I don't know whether there is an Eastman Kodak in the world right now that can do that to the silver market. I will say, though, and I don't know whether you people are aware or not, but I remember distinctly back when I was a commodities broker back through here, there used to be companies that were in the gold business that literally silver would be a byproduct of their gold mining. And the silver price was so low, they couldn't even justify processing the ore. So what it ended up happening was they would just have valleys beside the gold mine filled with unprocessed silver ore. And they're just, the scuttlebutt was, well, just wait for silver prices to actually get high enough to justify the processing of the ore. And that's what that is. And of course, you can see as soon as the M's start coming in, oh, you better be careful, look out. So we don't really have any M's yet. And I might even argue alt A, B, C, Ds. I think silver does want to push all the way up top here. But at the same note, I can't justify coming in and investing in silver right there. What's my number one job? And ironically enough, from a risk taker's perspective, I have to realistically expect silver to test these lows, and I have to expect silver to test these highs. Whoops. So from a risk reward perspective, it's actually, maybe let's redraw that. I would say the odds on something like investing in silver it's like a coin toss right now. Maybe up, maybe down. The odds are actually pretty equally skewed. So that's not the kind of investment idea I want to invest in. And, I'll come along here and I'll buy reload zones. So if I can get the market to work its way back down into that window down there, that's probably actually an attractive window to maybe take a shot, because then that way the risk reward window now, where'd it go? Here. If we can get a move down into here and I take a shot against these lows, well, now the risk reward window is that versus that. And that's the kind of trade I'm interested in. And hopefully you see the difference. So coming in and buying silver here, man. And what scares me is buying the gold. Oh boy, I think you're asking for trouble. So anyway, back up a moment. Can you see how this market actually moves in relatively consistent cycles? And if you think about who buys gold and why do they buy gold, right? Inflation hedge, anti-fiat currency system proxy. Who buys silver? Why do they buy silver? Silver is an industrial metal. when the economy is booming and the Fed is taking rates lower. People will invest in things like silver to in the manufacturing industry and stuff like that. So into the health crisis, late 2019, early 2020. It's the end of the world. Remember all that. I'm sure you all remember it in spades. And gold started to dramatically outperform silver. Remember, the stock market was going to go to zero. Politicians, sacrifice my life to save capitalism. And the Fed comes along and says, all right, you're good, obedient bitches. You'll do exactly what we want. And they took interest rates down, absolutely hyperinflated the money supply, which of course is exactly what the banksters' agenda is. And if you want further anecdotal evidence of the banksters and their agenda, what's happening in my country is an absolutely perfect example of that, where I mean, hell, you could probably just do any YouTube video right now. When I load up this, almost every single page is like, oh my God, do you see what this bastard's doing? I don't watch the YouTube off of this channel, though, because I don't like to distort it with my own personal views. But let's see. So this is my whole country and all this crap. But this Carney guy, he literally wants to go and spend $180 billion of money that we don't have. And the question is, where the hell are you going to get the money, sir? And the answer is, he's just going to print it out of thin air. Now, what happens to prices in your society if the central planners and the central banksters decide to hyperinflate the money supply? You all know the answer to this. It's not rocket science. It's disgusting how the public has no clue about this. Isn't that interesting? I can't find any reference to this guy on here. Anyway, this guy's a fun guy to listen to about China. Well, maybe we can just type in Kearney. Let's see what comes up. There you are. So his costed election platform, I mean, it is absolutely insane. The numbers, the money that this cocksucker wants to spend that none of us have. And literally, how do you do it? You literally just print money out of thin air. And of course, I've shown you repeatedly, probably the easiest sales pitch of this is, do you think that the Chinese, and keep in mind these quasi-communist, outright socialist, but really Rothschild controlled puppets, the WEF audience, all that, they are still completely in control of our society here in China. And I hope to God this Polyev can do something about bringing these bastards into check. But there is the United States money supply. Are we about to head into hyperinflation here? That's a bit scary. Oh, darn. That's the U.S. market. And you might even find that U.S. housing prices, ironically enough, I think you can actually make the argument that the housing market has absolutely nothing to do with houses whatsoever. And it has everything to do with this hyperinflation of the money supply. But what I wanted to show you was China. You think the hyperinflation of the money supply in U.S. is bad? Check out China. I mean, they haven't even slowed down at all in my country, the fuckers. And nobody gives them any permission. There isn't any referendums. There isn't any, is this in the best interest of the citizens of the country? It's like, just fuck you. So there is the hyperinflation of the money supply in my country. They haven't even slowed down one goddamn bit. And this cocksucker wants to literally go and double the national debt again. Right? There is no path to balancing the budget. None whatsoever. In fact, not only is this not balancing the budget, the motherfucker wants to go and spend $180 billion that we don't have. Now, how on earth do you do that? If you and I, Great Del Moody, I don't know, maybe you have a special relationship with your banker, Glass Insights. Can you just go and, you know what, bank, I'd like to borrow a whole bunch of money. Yeah, I don't have any collateral to back up the loan. I don't have any income to back up the loan. Hey, we're just going to borrow the money. How on earth do you do that? This is where the conspiracy of all of this comes in. So I would actually make the argument that, of course, this cocksucker was the central bankster of my country, elected official. No, appointed. This guy was then appointed the central bank runner of the Bank of England, and go over to England and ask people how their life is going right now. And direct responsible, this son of a bitch is directly responsible for that. And now he's actually just like been appointed leader of my country, no democratic election. Now we are going to have this snap election, and well, let's create a crisis with Donald Trump. And by the way, Donald Trump and his whole tariff talk is about his country. It has absolutely nothing to do with Canada, unless Canada is entirely dependent on the United States. So with the United States saying, you know what, we don't really want these international countries to be so dependent on American consumers, we're going to put up some barriers here so that at least the playing field is level. You want to sell stuff into our market? Great. We should be able to sell stuff into your market. And this whole WEF and, this manufactured agreement that was made 20, 30 years ago with the Bushes and all that, to basically sacrifice the U.S. economy to save all the social safety nets that the baby boomers all wanted to make sure didn't go away. Those days, I think, if anything, I think you have to hand it to Donald Trump, where he's like, you know what, enough is enough. We're not in that world anymore, and we want to officially change that world. And all of these little crybabies, this is their quote unquote crisis. Is, oh, the US isn't going to let us basically build and run our entire economy based on US taxpayers' purchases of our products. Now we actually have to stand on our own 2 feet. That's the crisis? That's not a crisis. That's well, maybe you ought to just learn how to stand on your own 2 feet and not be completely dependent on freebies handed out because the US government basically mortgaged its soul there 20, 30 years ago and literally set up the US citizens to basically foot the bill for the entire world economy. I'm absolutely disgusted at the way that, and keep in mind that this Rothschild's model that was put in place was actually first put in place back in the 1930s, and it was solidified in the 1940s. I think those days are over. And if anything, I think a country like China, it's got to learn how to stand on its own 2 feet. But the answer is not to go to the Rothschilds and say, you know what, we're just going to completely destroy our citizens' standard of living. We're going to destroy the purchasing power of the currency by going and borrowing a whole bunch of money that nobody has, and we don't even have any collateral to back it, but we'll just be indefinitely enslaved to these Rothschilds, sort of bankster, WEF, world elites, if you will. And keep in mind, this guy is one of them. What's so sad about this guy is he's made his fortune off of a publicly traded company in Canada, and yet the company itself actually is a known tax evader. They actually set up shell companies in Bermuda and Cayman Islands and stuff to basically shelter every penny of earnings from Brookfield Asset Management so that they don't have to pay the absolutely insane tax rates that you and I have to pay. I mean, the story is, and the problem is that this guy gets elected, and I hate to say it, but it looks like all of the numbers are saying that he will. Then it's very difficult for a guy like me to justify staying in this country. It's utter hypocrisy. And he is solidifying that Canadian standard of living is going to be absolutely destroyed, i.e., inflation is going to continue to be absolutely out of control. Then, of course, we go back to Brian's rants. I mean, the sad part about this is that we know that this is what's going to happen. This is where it gets really, piss off. Half of the time, I don't like being a technician because unfortunately, we can, to a certain degree, see the future. If you actually study history and you study the past and you understand that these things all just move in circles, there is nothing new about what's going on here, then what you see is that we actually have an absolute insane inflationary nightmare that's only about a year or two away. And if anything, those people that are very bearish of things like Bitcoin, I might make the argument that Bitcoin is a very, very good inflation hedge. And so as a result, if the market actually believes that something like this is coming, then I do believe that in this window here, and I think it peaks somewhere in early 2026, we're going to see Bitcoin price go absolutely insane here to reflect this coming horrific nightmare inflationary scenario. I think it's coming. And, if anything, the one thing that has me sort of stunned here a little bit is the fact that the Simpsons were wrong. Where's our funny little Simpsons reference? So they made this grand prediction that, orange toupees would be whacked here in April of 2025, but that didn't happen. So I'm actually pretty disappointed in The Simpsons. How could they screw up so badly? I don't know. Anyway, I would just simply say there is some sort of horrific crisis coming here. Very much like the pandemic. I think that there is some sort of planned crisis that's only about a year or two away, folks. And this next 4-year window for us, this is going to be the most difficult 4 or 5 years relative to the entire money cycle. This is going to be the toughest 4 or 5 years of your entire lives, my life included. And if anything, you almost have to feel good for the kids of the world, because this is a horrible part of the cycle. And if you're a kid, then at least you'll spend the majority of your life on the other end of this cycle. Once we get to sort of 2032, 2033, then I think life actually gets pretty enjoyable for probably the next 20 years. I mean, I don't think it's going to be absolute gangbusters. I think what happens is very much like the 1950s. We'll actually go through a period of relatively quote unquote low inflation, but that's just literally on the other side of this absolute insane chaos that, it's interesting how nobody in our school system talks about the hyperinflation of the 1940s. It's all kept very hush-hush, which is very disappointing. I think it's a major failing of our education system, but also, too, if you are a bankster and you want to ensure that this model continues on, you don't teach the public about these horrific financial windows, right? Because you got to keep the public nice and stupid. So anyway, blah, blah, blah. And I'd also say too, unfortunately, that once we get on the other side of this 26 cycle, I definitely think that gold prices will fall as well. As as gold usually moves with the economy, right? The economy right now isn't like breaking. I think the economy right now is just sort of correcting. And if anything, this is a little bit of an anomaly. I think it's a crisis in that the investors in the public right now are choosing to go bury their head in the sand versus actually doing stuff. And I might actually argue that what is the catalyst that will break this crisis model? The catalyst will be that the Fed acquiesces and the executive branch down in the United States and the banking industry get on the same page. Here is that sickness crisis. The banksters came out, took interest rates to zero, and that created that absolutely insane bull market. And if you think 2020, 2021, into early 2022, this was, of course, the top of the last economic hurrah. And actually, it'd be interesting to go look when did gold and silver. So here's your silver. There's 2020, that crisis. There's 2021, and that sort of rebound from the Fed taking interest rates down to zero, and everybody feeling a lot better about the economy. And you didn't hear people saying, "I will sacrifice my life to save capitalism." So then we got into the point, and this was sort of the peak of Joe Biden's window. And then, of course, he went absolutely crazy socialist, CARES Act, Build Back Better, all that, just spending insane amounts of money that we didn't really have. That took the market up. And of course, the Fed started to raise interest rates again. And that sort of, we went into an inflation crisis here because the government spending went absolutely out of control. With the Fed sort of, raising interest rates, then sort of peaking and saying, all right, I think we're done, even lowering rates a little bit into the actual election window last year. I think to a certain degree that sort of set up the absolute best of times Joe Biden presidency. I think that they lowered interest rates a little too soon, and inflation started to roar its ugly head back again. And now, on top of that, Mr. Trump has gone and added all of these taxes, because that's literally what tariffs are, is they are nothing more than taxes. And the Fed is not cutting interest rates, being very stiff and stubborn. And so we've got our little crisis scenario. But notice, if we look at this from a, relatively consistent path, I think we're pretty damn close to whatever this crisis pivot is here. And then we'll go through a period of calming down. Interestingly enough, from Trump's perspective, now the rhetoric is, well, we're using the tariffs to justify negotiations. So I don't know which side wins this battle. Maybe the Fed continues to be dicks and says, sorry, we're not lowering rates anytime soon. The bond market, of course, started to balk there with Mr. Trump sort of shitting on the entire world and the world shitting back on the US and saying, fine, we'll just dump your bonds and that's the end of it. And that's created this little crisis. And interestingly enough, Mr. Trump has actually had to back off a little bit. And I might make the argument, should we see this M out? Well, then we know that the crisis probably is closer to an end than the beginning. Does this have to look like this? It might. I'm not going to predict the top in this, and I don't know what the hell gold and silver are going to do. All I'll just simply say is coming in and being a buyer into crisis here at these levels, I think you're asking for trouble. And from a risk taker's perspective, Ironically enough, the silver market, it's probably like 60-40, 60 risk, 40 reward. I might actually argue something like this. I mean, it's very difficult for me to find upside objectives here. We've hit so many upside objectives. I don't know. I mean, maybe if we're lucky, and also too, keep in mind that we're not actually in a seasonally bullish time of year for gold. So that's kind of an oddity. But I might argue, I mean, maybe if we're lucky, we can punch up to this 1.618 up here and maybe test 4Gs. I don't know. But that would mean something like, okay, there's your reward window and your risk window is that. Oh boy, I can't take that trade. Can't take it, can't take it. And like I said, in all my public tweets and stuff, I actually really like the idea of going and buying a put there. Talk about contrarian, eh? Totally opposite. All right, I have no idea why today was spent just talking about the gold and silver, but that's what I've done here today. So I hope you enjoyed the conversation. As I had said with regard to Bitcoin, I mean, ironically enough, talking about gold is like talking about Bitcoin when we were running up here. I mean, coming in on the buy side here, that's just stupid. Maybe the gold market does this over the next 6 months. That wouldn't surprise me. With regard to Bitcoin here, I still think ABCDs, that would be very natural. We actually did have a investor signal here. We've had the 13 EMA now cross below the 30 SMA, which in itself is actually a sell signal. So still haven't changed my thinking here with regard to Bitcoin. You can see 13 EMA sitting 86,741 and the 30 SMA sitting 87 even. So now 13 EMA is a good $250 lower than the 30 SMA, and the 30 SMA is still trending higher here. So that spread is actually going to widen. And I think that we're probably in this kind of period here, just like we had last year. We were lucky this time last year, we were still in that 4-year bull. So we just needed to actually see some W's start to form and then turn back up. And you can see the moving averages turn back bullish here. So it wasn't really that big of a difference. And quite often this is the case. Let's hope this is the case this go round. But what I will say is I really like the idea of this market coming back down, eating this tail in here, A, B, C, Ds. I like this reload zone off of this particular range, 61.8 to 78.6, and also off of the entire range from this low all the way up to this high, 38.2 to 50%. I'd also say too, looking at this range here as well, you can see where most of the buyers actually were for Bitcoin. And ironically enough, Donald Trump, our election rally wins. This rally actually didn't last very long. The breakout 1, 2, 3 weeks, 4, 5, 6, maybe. And that was basically it. So a period of a month and a half, that was the entire bull market. And then we spend 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. So 6 weeks of up and then 19 weeks of sideways to down. That's not a bull. I'm sorry, folks. I mean, let's hope we can go and W out. All of my sort of thinking about the market dumping into May, sell in May and walk away. 200 period moving average on the weekly charts, sitting down in that window as well. And then, like I said before, I really like the idea of the market doing nothing more than just coming back to where people actually are along this story. And if this is still a 4-year bull, and I think it is, I like the idea that all we do is we just back up into this window. And if we do paint higher highs and higher lows, so we really don't want to see this low taken out, and coming down into this level, that would be perfectly fine for that. Paint a W, and then we start our next leg higher. I could very easily see that. The issue you have to be cognizant of, though, is that we are running out of time here, folks. And I could very easily see the very end of this rally. If anything, this is a perfect analogy of what securitized markets look like. Is they'll spend a lot of time driving the public absolutely crazy, doing absolutely nothing. And then the bull market is like 4 or 5 weeks in duration. And if you missed it, then you missed it. And so I could very easily see, we spend, next month or two trying to find this bottom. We bottom out through the summer and then into this insane cycle peak. You saw what the eclipses did to these stupid humans. And coming out of the eclipse, what it did to the stock market. I don't see any reason why this eclipse won't have all the public going fucking apeshit crazy into this cycle event pivot, which is about, let's call it a month or so following that eclipse window. That to me makes perfect sense. So, in simplest terms, all that talk, blah, 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 what Brian is saying is there. That's what I'm seeing. All that talk. But, what can I talk to you guys about this? It's the same message I've been saying for the past, 3 or 4 months. So that's why I spend so much time talking about the gold here today, is because if you go and invest your hard-earned money in gold, it's exactly the same. Here was Gucci sweater wear right there. I don't know what idiot we can make reference to. I suppose this was Donnie and the way that Donnie completely manipulated that Solana market and the altcoin market. Maybe that's the reference, right? And of course, Donnie's son coming in like a doofus and telling the public, oh, go and buy your Ethereum here and you'll do great. And holy fuck, how did that work out? So ironically enough, kind of like the Mina, I actually, as an investor, I actually think the relative risk of coming in and nibbling away on something like Ethereum at this level here, given we were up here and we were down here, and Donnie and his stupid idiot son are all trapped long up here. Well, I mean, whoever listens to them. And again, I think actually that was a con job. And I think they were probably selling into those public endorsements of buying because, of course, they have no conscience, no morals whatsoever. And they'll steal the public's money if they have the opportunity. We all know that. Don't kid yourself. So the point here is now that we are down at 78.6s, we are at the POC, we are back against original structure. I'll be happy to go and buy that. And I did. I am a guy who puts his money where his mouth is. So, that's, I think, a perfect analogy of this market state. Now, does this take like maybe even through the summer to turn back up? And can I get a double? Ironically enough, we get some sort of orgy peak. Again, think 50% rules. I'm not really even expecting new highs. Just what's a 50% retracement of this range if this happens to be the lows? Now, this is WD Gann 101, 27.54. So I came in here and bought at 1,500. If I can get a rally back up into this area and against value high, 3,200, I get my double. I can sell half of my Ethereum against this trend line. And if the market does go crazy, ape shit stupid, well, great. I'll ride that wave. Free coins, no risk whatsoever in owning this position. That's music to my ears. So why wouldn't we come in and buy this reload zone pullback, expecting our big crypto cycle pivot, right, into that October, November? Seems logical to me. And if we can dip into, remember Tom Lee? I mean, the thing is you got one of the smartest guys on Wall Street who's just been like rah bull. And he has been calling for Bitcoin 60, 70,000 for a very long time. Why would we fight that? I mean, Tom Lee's a pretty smart guy. And I mean, I can understand you saying, well, Brian, I got a big honking W here. So I gotta buy. I buy W's. I took your fucking course, right? We got a W here. I gotta buy. Okay, fine. But there's no signs of W's here. We just made a new low here. So why are we pushing? Why is anybody in such a great hurry here? Just let the market do its thing. And if we do get down into reload zones, I might go and buy some Bitcoin. But frankly speaking, I would much rather, to be honest with you, this chart, right there is my Kraken account. But anyway, I would much rather go and put my money to work at a 78.6 off of a range like this than going and buying Bitcoin at that reload zone. I think that there is a double here. I don't know. This is a tough one. I suppose if we get down into 60s, I could see 120, 130, a press up against these highs to give me a double. I could see that. Do we have this absolutely insane face rip rally here now facing us here into that cycle? I will be honest with you. It's feeling like a further and further away stretch. And I don't like the fact that actually the moving average is just crossed bearishly here, which implies that, at first we got to get back into the bull. Once we get back into the bull, and if we have any time left on this cycle, I'll be looking for that push. And you can even see if we use these trend lines, keep it simple, stupid. Remember I had talked earlier about, I was really curious as to why 2.618 and 4.669 were never traded to. Well, maybe that's the extent of the rally into that cycle window. I don't know. I will say, and the plan all along has been that if this thing does go up above 250 Gs in this cycle, I'll be happy to sell and I'll go and buy a house for my son. But that's an if. It's not I am going to sell. It's I am going to sell if I can go and buy a house for Liam with those assets. If I can't, then I won't be selling. And it's just as simple as that. This is a rise only market, POW, having events, how the story goes. So is it in my best interest to freak out and panic dump here? Not really, considering the erroneous capital gains, egregious capital gains taxes that I have to pay in my country. I'd rather just a one-shot deal versus trying to sneak in, sneak out, sneak in, sneak out. So if the market does give me the opportunity to sell above 250,000, great, I will sell. But if all we do is top out at like 100, 150,000, then I won't be selling any of my Bitcoins. And we get to do this for another 4 years. And I suppose all of you in the public are probably rooting for that. Okay, I've got about 20 minutes left. So I think that's enough time to circle back around and look at the questions that were asked in today's AMA document. The only question is, where the hell do I have this? And ironically enough, if this son of a bitch wins, then I absolutely guarantee you Bitcoin's going to $1 million. I absolutely fucking guarantee you, if this cocksucker wins this election, the Rothschilds are in full control. They are going to hyperinflate the money supply. And the sad part about it is it will probably cost $500 Chinese dollars to buy a loaf of bread. And Bitcoin will be $1 million in Chinese dollars. The only problem is a house will be $10 million in this fucked up world. And look at him smiling at us like, oh, it's all part of the plan. You will own nothing and you will be happy. Fuckers. Anyway, blah, blah, blah. Okay, let's get back to that AMA document. And somebody wanted me to look at that TAO. And I'll tell you, I've been asking Sjord, and Sjord, if you are watching this video, please, can you try and come on? I do like when Sjord was talking to the community about fundamentals in the crypto space. Keep in mind, I'm never, ever going to bill myself as some sort of fundamental crypto expert. The only thing I will absolutely say is if anybody says anything about guarantees in crypto, shut the fuck up. You have no business talking about guarantees in crypto. It does not exist. This is venture capital, and I am 100% confident that any platform that says that they have a guaranteed floor on their asset, it will be attacked on the other side of this cycle and it will go to zero. Guaranteed. So that's the only thing I absolutely know for certain in this space. Do not fall into any pit traps of people saying like 10,000 APY guaranteed, all that. Don't fall into that bullshit. It's garbage. It's nonsense. You are asking for trouble. This is venture capital. You can make a lot of money in venture capital. Don't get me wrong, but there are no guarantees. And once we are on the other side of this cycle window, all bets are off. All right, now where the hell's that damn AMA document? it's around here somewhere. I know I loaded it because I posted. It's got to be around here somewhere. I got to click through all these things. No, this is the newsletter. It's not there. It's not there. This is my trading futures. It's not there. And actually, I have to say, I'm really, really having a lot of fun trading futures with our futures group. We have a room at TRI that is strictly for professional futures traders. And most of these guys, I'm so proud of them. Almost every single guy in our day traders battle stations room, actually, that's the actual chat room. Where is it? Here, this room here. Almost every single one of these people has now been actually funded by my old prop firm, good old Ed. I don't see Craig in here. Adam. How are you? Oh, actually, Chris isn't here, but Chris also is working through the funding process with my old prop firm. And we're just in here every day, just having a great old time, just flipping futures contracts. I trade the Top Step account, but I also trade my own personal account. So I make money for myself, and I also make money for Nebraska. So, but that's Brian always likes to try and make his life as difficult as possible. So I'm trying to trade two accounts simultaneously, which I don't know, is kind of stupid, but oh well. There's Adam. Yeah. Oh, good, because we missed you. Everybody in the room, as soon as the price trades back to the 13 EMA, it's like a race. Who's going to say, all right? And Adam chimes in, 13 EMA acting as support. And it's great. It's so perfect because it's everything that I teach. And you guys are all fucking badass, awesome traders. And Adam, we should give a shout out to Adam. Adam just recently passed their evaluation as now he's a funded trader at Top Step. So everybody give Adam some accolades. I'm so proud of him. And again, I love working with the group, and they're consummate professionals. It's beautiful just to be in there day in, day out working with these guys. There's a happy face. Come on, you people. Big House, Great Del Moody, Andrew, Ella Vorn, all of you people, 3Bet, give Adam some props. It's very difficult to pass these tryouts, and I'm very, very proud of him. Class Insights, if you could go in, give him a pat on the back. Right. Hey, there's Jim and Liz. Yeah, you go across the street and give him a pat on the back. Pat on back for Adam. Congrats. Congrats. I'm so proud of him. Okay, now where the hell's that damn AMA document? I'm running out of time here. I have to hit the road here in about 15 minutes. So hope you guys enjoyed the offering here today. Did go a little bit, maybe too much into that gold trade and the silver and all that, but oh well. Brian, he loves the sound of his own voice. Where the hell's that damn AMA document? There it is. Yay. All right, let's see what we got here. Okay, for today, 420. Hi, Brian. On the recent debate, Domino's Pizza caught your attention, which is funny because that stock also caught my attention, and I've been following it. But in Australia, DMP is this area. So the NASDAQ DPZ would be considered a momentum trade, i.e. bullish bot. On the ASX dump, it would be a value trade, i.e. little old lady, Nanny Nibbles. How would you go about on navigating this? For example, would you wait for confluence for when the NASDAQ put in a weekly W? then start hunting on the SX. Conversely, would you just wait for a weekly W? Yeah, I think you have to, because keep in mind, Australia economy and the US economy, very different. And if anything, your company probably has to pay kickbacks to the US company. And that's half of the reason why they're doing as well as they are, is they get these royalties from all the countries all over the world that have Domino's pizza franchises. So I think just speaking directly to this, I like the idea that you have to wait for some sort of buy signal in the Australian stock market so that Australia itself is actually painting higher. Having said that, because these are weekly charts, if you do happen to see an asset that is painting a weekly W, we trade setups. And I actually, to be honest with you, I'm 9 times out of 10, I'm perfectly happy going in and buying a setup and trading a setup, even if the broader market is meh. Because sometimes, especially, if we're in that part of the cycle where things like healthcare, consumer staples, defensive names, utilities, they might actually start outperforming as the broader economic cyclicals, like energy or industrial names and stuff, they actually are heading down. And so as a result, the Dow Jones Industrial Average is heading down. But you find that consumer staples, as sort of a safety place, it actually is moving up. And one of the reasons I can't comment on the Australian Domino's, but one of the reasons why I like Domino's so much, and it explains why the damn thing's so freaking expensive, is I was shocked when I saw how many shares were outstanding on the US company. And that is why the damn stock is so expensive. They probably do need to split the stock. But I'll tell you, one of the reasons why I was just so over the top jazzed about this is look at it, only has 34 million shares out. Fuck me. God damn. I mean, that's what you want to see. I can't tell what kind of debt they're carrying. And frankly speaking, the stock does look a bit expensive. But I have a feeling what's going on here is this is kind of like, you know what? It's a safe place to hide out. It's a domestic name. It probably isn't too suspect or subject to the whole tariff shit. And, are Americans going to stop eating pizza? I mean, come on. Let's call a spade a spade. I don't know whether I really like the price chart that much. Like you said, I think it is a bullish bot, which means that you're going to have to take a little bit more risk, maybe one low, two lows, three lows kind of idea. Maybe the entries here. It's going to be a pretty big formation. So, it did come up on the screeners, but I actually think that it came up as kind of like well, if the market is trend continuing, okay, fine. But I will say I'm a little bit leery about the fundamentals. It's not a cheap stock. Trading at 3.17 price to earnings growth, we ideally want to see stocks trading below 2 there. Price to sales, ooh, that's a horrible number. Price, and this is what concerned me. I'm not quite sure what they're doing here because you can see they actually have a negative number for their book value per share. So something doesn't smell right about this. I'm a little also concerned about the number of insider ownership. That's pretty damn low. So I'm almost like, as you pointed out in your question, I don't think that this is a value play here. I think this is purely a momentum play. And it's sort of like a play to sort of shield yourself from things like the industrials and stuff kind of crapping out here. I'm not overly excited about it. I tell you what, I will say, why don't we on Monday's broadcast, and keep in mind Monday, Wednesday, and Friday I do a show for the site. We do basically the same thing. So in Monday's broadcast, let's pick apart the Aussie chart and see if we can do some FA there as well, and give you a value trade to consider. As you pointed out, I think it probably, if it's trading down the bottom end of the range, it probably is more of a value play in Australia. And I'm not overly impressed. This is certainly not a, oh my God, pound the table. This is an incredible buy. I think it's okay. I think it's a trade. But at the same time, too, I also said that we needed to see some W's come in here to actually justify us going long. And you notice we made a new low here. So that's not a W there. If anything, we need to see this thing come out and actually W out here. I'm not holding my breath. Like right now, I'm just sort of like, nah. You know, it did come up on the screeners. We did have this beautiful outside upside bullish engulfing bar. If you wanted to just simply trade this on a momentum trade, as you had pointed out, it's a momentum trade. Okay, well, levels are levels are levels, but I'm not going to sit here and talk to you about fundamentals. And this is a value trade. I just don't think it is. So, yeah, be forewarned. The thing that really jumped out at me, and if this was like $46 a share, seeing those 34 million shares out, my God, I would have jumped all over that. But unfortunately, what I think's happened here is Wall Street jumped all over this. They bid the stock up insanely because, of course, there's so few shares out. Yeah. And so there is the bullish bot that's trying to set up. And you can see the 25 level is kind of in here. One low, two lows, three lows. But if we lose these lows, you probably better just walk away because, like I said, fundamentals, I'm not overly impressed. This isn't jumping out at me as like, holy shit, this is a value stock. It's not. So, okay. I'm going to leave it at that for that. And we'll circle back around tomorrow and let's take a look at the Australian stock. Number 2, from Bridgeforth, Brian, you answered my question yesterday. Now my question is this: if BTC reaches its top, but it does not reach 250K by a house goal, why wouldn't you still sell at the top and wait for a year and buy back for much less? Remember, I told you the capital gains taxes in my country are an absolute nightmare. Now, interestingly, there is the Polyev guy who actually is, I don't know if he has a chance of winning. I don't think he does. But if he does happen to win, one of his platforms was you can sell an asset, and as long as you roll the money directly into a Canadian asset, you pay no capital gains tax. So if Polyev does decide to win, does decide, I don't know whether, that actually comes back on the table. Because like I said, you know, like these liberals and that Carney guy, they actually want to raise the capital gains taxes to 66%. Of the capital gain is included at your personal tax rate. And of course, if it's over 250,000, then that's the absolute highest tax rate in my communist country, which is just horrendous. So the only way that I can justify actually doing the trade is I will literally sell the Bitcoins, go directly with the capital and buy the house, and then deal with the tax bill and take out a reverse mortgage on the house and have Liam's government subsidy actually service that mortgage for whatever the tax bill is. And then that way, when Liam inherits the house through the trust or whatever, he basically owns it, and his monthly stipends, special needs people, people with disability get a government subsidy, and service the whatever that tax bill is with that monthly payment. So in essence, have the government of Canada pay that tax bill. That's the way I think it should be. So long and short of it here is, it's not a bad idea, but if Bitcoin goes to 100, 150,000, My hunch is that Bitcoin will probably correct back down to 30,000 or so, usually about 80%. Is there a trade to be done there? There could be. It's not a bad idea, but at the same time too, why do I need to sell? What am I going to do with the money? The only reason why I'm selling the asset is to buy the house for Liam. And are you trying to tell me it's a good idea to keep my money in fiat? If it's not enough to actually buy the house? Fuck no. I've already told you and I've showed you all clearly what my expectations are for inflation in the coming few years. I don't want to be in fiat. If anything, I'm trying to burn through as much of my fiat as possible so that I'm not fiat long when we go into this mess, right? And here, hopefully, if fingers crossed, I'm going to go and buy a house with a lot of my fiat. And if we do go through this absolute insane hyperinflation, if Bitcoin price does run up to the point where I can go buy that house, well, the house itself should reflect this hyperinflation. But just sitting in fiat and going through this, I think it is actually going to be a very painful experience. So that's the number one reason why, and hopefully that answers your question. I don't really want to sell and go into fiat and have to pay a fucking ridiculous tax bill and then have to worry about trying to time my way back into the market. I got way too many other things on the irons in the fire. I would prefer to actually spend that energy getting the house down in the States, building out like a microgreens operation, creating a trading environment where students can come and sleep over at the property. One property I'm looking at has like a 5,000 square foot warehouse facility and 4 bedrooms. So I think I'm going to need sort of a house manager. And I think I've got a guy who's interested in that position because I can't stay in the States all year long. But I would much rather focus my energy and my efforts into building out that trader sort of campus that's basically just south of Chicago. So we can go up and harass Hogue and Eddie and stuff whenever we want. Versus having to worry about this silly Bitcoins and what the fate of cryptocurrency is here. I mean, it's going to do what it does. And I do definitely think that this is a rise only market. And I might argue that if you don't have to sell, there's no reason to sell. The have to sell just simply comes from a perspective that if I have the opportunity to buy Liam a house and get him the fuck out of this government facility, I will. But at the same time, too, I'm not going to look a gift horse in the mouth. He has all of his costs and everything paid for, and I can't go and buy a house here in BC because the prices are absolutely ridiculous. So if Bitcoin does go absolutely crazy here, great, that gives us the opportunity. But if it doesn't, then I'm just going to sit and wait, and Liam will just have to wait another couple of years, 2 or 3 years. Not going to make a huge difference in his life. And maybe I go and make $1 million trading futures contracts or buying and flipping stock or options or something. Keep in mind, if I do go and buy this place down in the States, I do have about 250,000 US on top of the house purchase. So I want the house purchase itself to be cash flow positive so that there's no further drain on me just to have that place up and running, microgreens, a live campus for Brian's trading, that kind of thing. I also have 250,000 in cash, and I want to run an options writing business because fuck, that's like easy money as another income source. And again, business partners, I want to include them in on this. And then they basically just run the options writing business out of Chicago. And we just simply collect income from the options market on a monthly basis. So there's a million different irons in the fire, but I don't want to push with regard to crypto. Don't want to push at all. Okay, if you move to the US, then consider moving to our territory of Puerto Rico. No capital gains tax at all with blessings of the US. Well, also, too, I don't know whether you remember, Puerto Rico is a little bit dangerous. And is this, who was James, right? Wasn't James also in Puerto Rico? I don't know whether he left Puerto Rico or not, though. But Puerto Rico has a bit of a challenge with its electrical grid right now, which I'm sure you're well aware of. But also too, and if we go into like some sort of financial crisis, Puerto Rico is not defended by the Fed, and the Fed has specifically said we do not have any interest whatsoever in helping Puerto Rico out. So you be careful down there in Puerto Rico. Having said that, I would be very interested. Don't get me wrong. I just don't think I can buy the property that I want to buy with the amount of money that I want to spend in Puerto Rico. It's just too expensive. But if you can tell me about a, let's say, 4 or 5 acre lot that has a 2,000 square foot house, all with waters, with mains, with a consistent electrical grid. You could drink the drinking water. Yeah, power grid's a bit of a challenge. But if I can find a 2,000 square foot, 4 bedroom, fully furnished, walk in ready house, 5,000 square foot warehouse, fully heated, fully air conditioned, if I can buy a place like that for $250,000 somewhere in that area, let me know. And I'll be happy to consider it. So let's talk more about this in tomorrow's broadcast, okay? I mean, I don't have a problem. I'll say, let's circle back around and talk more about Puerto Rico campus ideas in Monday's broadcast. Totally fine with that. And if you can show me some ideas, well, maybe you can convince me to change my mind. Right now, if anything, half of the reason why I like basically the dead center of the United States of America is I'm the type of guy I want to buy when nobody else is interested. I want to buy when people are crying. I want to buy value. And then when the public gets interested, when the public is rah, 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 when the public is circle jerking, prices, of course, have been bid up. That's, of course, when I want to be selling. So the reason why I'm interested in the heartland of the United States of America right now is because nobody's interested. All right, last question, and then I got to get on out of here. Hi, Brian. With the whole tariff situation, are there any countries out there that can be beneficial for themselves? Yeah, that's a good question. If anything, I think what's happened here is after the dot-com blow up, the entire world economy just went into the shitter. And then the entire world economy, because the Americans were so desperate for capital, basically got suckered into building out their entire economies based on the premise of selling goods and services into the US market. And as a result, the US, the typical American citizen, has been basically bankrupted because of this. And now, like I said, you have all these international players who have been very, very comfortable just basically stealing the wealth of the United States of America. And keep in mind, international banksters, they love to legally steal your money. I think they literally sit up at night, literally masturbating, thinking about how they can steal the wealthy country's monies. I really think that that's a fact. And I think that basically the Rothschilds and all of their minions, WEF idiots and all that, they've basically become very, very comfortable with this notion of literally bankrupting and living off of the backs of US citizens. And now all of a sudden, one American citizen has stood up and said, no more. Liberation Day. Who knows what the hell will come of this? But if anything, hats off to Mr. America, for having the balls to finally stand up to these bankster crooks. And you all know that this story ends one of two ways. It either ends in one, the population bends over, they lube up their anuses with a whole shitload, no pun intended, of Vaseline, and they take it up the ass from Mr. Rothschild, i.e., add a zero onto the end of all of your price tags. And yes, you thought you were a millionaire. Turns out you're only worth $100,000 in new terms. And, being a millionaire, you thought that was a good thing. That's a peasant. You have to be a billionaire now to consider yourself rich, right? You've all seen it happen right in front of our eyes. We have been great resetted by these bankster cocksuckers. It is reality. Now, the other side of the equation is the population says, no, we are not going to be great resetted, which unfortunately I think is almost too late now. And at the same time, too, I don't know whether Donnie really is that big of a fan of seeing prices go down. So frankly speaking, I think he's perfectly happy with the great resetting. But I think at the same time, too, since the United States is the world's hegemony, that's not sustainable at this rate of spending. It's not sustainable, folks. And we've gotten to the point where at least somebody's like, okay, we've been great resetted. There's nothing we can do about that. But how do we prevent us from literally having to find a new world hegemony? And I think that's what Donnie's trying to do right now. This ends one of two ways. Like I said, we either bend over and take it, or there's some horrific civil war, maybe even a global war, and a new hegemony is established. Guys like Ray Dalio actually believe that China is the next world hegemony. I might argue that there will never be a totalitarian dictatorship hegemony. And ironically enough, the CCP in themselves have actually guaranteed that there will not be a Chinese currency hegemony. That doesn't mean that they're not going to dump U.S. bonds. Don't get me wrong. That doesn't mean that the U.S. dollar can't go down in value and gold go up. None of that is applicable. But I do think that the fraud of the Chinese bubble tofu dregs total fugazi economy has been exposed, and China is in the process of unbubbling right now. And no, I do not think there is any possibility that the Chinese currency could actually become the world hegemony. I think that's just a load of horse shit. But what I could see is this sort of globalist idea that we're going to create a new hegemony out of some sort of central planner, central bank, Eurozone, Chinese, American kind of hodgepodge World Economic Forum credit system. That's kind of what I think is the alternative now to the US dollar as the world hegemony. But I don't think that the US is going to give up the hegemony situation so quickly. And ironically enough, I think the policies and the politics in place right now are going to ensure that the US continues its hegemony status. Because frankly speaking, exactly what your question is who's going to take over? I mean, are you going to ask the Chinese to be the world hegemony? I wouldn't give my fucking money to Winnie the Pooh. He'll steal it in a heartbeat. Are you going to give Vladdy your money? That's going to tie you to a fucking tree and then steal your money. I mean, these people are they're evil. It's just like, this is medieval what these assholes in Eastern Europe are doing. This is like Dark Ages torture that they're actually doing on a daily basis in Eastern Europe right now. It's absolutely disgusting. What kind of fucking evolved species are we? Anyway, so if anything, I think what ends up happening is countries like Taiwan. Taiwan Semiconductor just said, oh, Mr. Trump, whatever you want, you got it. And they came over and they invested like $500 billion in the United States. So Taiwan, they're playing ball with the Americans. And how ironic, the Vietnamese of all people. Shouldn't the Vietnamese still be like, aren't there still Vietnam War POWs being held in Vietnamese concentration camps? I mean, whatever happened to that story? Now all of a sudden Vietnam and the US are friends? What a fucked up world this is. And by the way, the Vietnamese hate the Chinese even more than they hate the Americans. So, something like the Vietnamese thumbing their noses at the Chinese, well, that's pretty much par for the course. So my hunch here is that basically what's going to happen here is one by one, all of the fringe countries around the world will do their respective deals with Mr. Trump to make him happy. And my hunch here is most of this tariff talk will disappear. And the interesting thing is, I think to a certain degree, this whole tariff blow up was actually politically motivated, because a guy like the guy who's trying to run my country, he's in bed with Donald Trump. He bought a 100-year lease from Donald Trump, his kid's building in New York City, and paid the 100-year lease up front, $1.1 billion. Now, who the fuck would do that? That's the stupidest fucking business deal in the world, unless these people are in bed with each other. And Mr. Trump said, okay, you want to become leader of the country? I tell you what, I'm going to go out and I'm going to piss off as many Canadians as possible, talk about things like I'm going to actually invade your country. I'm going to do things 51 state and all that bullshit. And so as a result, all these idiot minion robots out here that are like, oh, Orange Man bad, Orange Man bad. Okay, who should we run to in Orange Man bad side? Oh, I know this guy because he's the establishment. And oh, he's got such a great pedigree. And of course, he publicly comes out and says, oh, I'm going to go to war with Trump. Well, is he? This guy's in bed with fucking Donald Trump to the tune of $1.1 billion. He is never going to go into fucking war with Donald Trump. They are just playing the public. And it is interesting when you go on YouTube right now, a lot of YouTube channels right now are like, now, why on earth is Donald Trump so quiet about Canada right now? What the heck is going on there? And of course, I would make the argument, this guy is clearly, based on the betting markets. He's perceived to have won the election even now. So unless there's some absolutely insane upset victory, which I doubt, this guy's already won the election. And Mr. Trump has done everything that was part of the deal. And now, frankly speaking, I don't even think he gives a shit about Canada. I mean, how can you tell when a politician is lying to you? We'll finish off the broadcast with that because it is 22. I've got to go. So if you can tell me, number one, how you can tell a politician is lying to you, then you understand exactly what's going on with all these idiots and the fact that, ironically enough, none of them are telling us the truth. Then secondly, what I would just simply say is, can you please wish Liam and I good luck on the roads today? I mean, it's absolute insanity out there in my country right now. You can imagine how stressed out people are. If anything, the politicians in my country are trying to buy the election. So as a result, they are actually manipulating prices down right now. So actually the politicians are the public is actually feeling a little bit better right now. Once the election's over, my hunch is those gas prices go straight back up. But can you wish Lily and I good luck on the roads today? And, best wishes that Brian does a good job being a good support for my special needs son. It's never easy. And then I guess the last thing I'll lead off with here is, can you force yourself to actually come in and consider buying down markets. You know, those kind of idiots that are chasing gold up top here, they're not risk managers. They don't understand how risky going and loading up on gold at the top of the market here is. And I might actually argue that something like this MINA, but we could look at 100 different cryptocurrency names. They all look like this. I might argue that actually the risk has been taken out of names like this. And now if you want to just go ahead and nibble your way into the names like this, I actually think that getting doubles on these kind of ideas is actually fairly simple. And I would be thinking, you know, acquire names like this, get yourself into a risk-free trade as fast as possible, sell halves on doubles, whatever. And then let's see what the hell happens into this coming fall. And you never know, this thing might easily go to new highs. I mean, you can see how quickly this bull market started and then blew off top. There's no reason why that can't happen again. So are you setting yourself up to actually take advantage of this? There were two questions in the DB request room. I know TOA, somebody asked me to look at it. I think let's plan to look at that tomorrow because like I said, I've got to get out of here. I'm actually running late now. All right, everybody, have yourselves a fantastic rest of your day. PMA for the win. Wish Lilia and I luck on the roads today. And the only thing left to say to you good people is a hearty bye for now.